The Quint.
Welcome back. You're watching Indian Open with us. Let's see how the Asian markets are faring at this point of time. Well, it's a mixed start for the Asian indices this morning. As you can see on your screen, Nikkei is trading with some bit of gains, up about 55 points. Shanghai just about in the positive territory, whereas some cuts seen for Hang Seng, which is trading with cuts of about 100 points. Well, the handover from US markets was definitely positive, and now that the US Fed meeting will be in focus in the coming days, let's see if there is any sort of rate easing cycle which is kicked off by the US Fed or not. But as of yesterday, because of the benign inflation data, you did see the US markets inching higher. So how are we slated to open this morning? The SGX Nifty is suggesting a mild bit of downtick after the sharp recovery that the Indian markets witnessed from the 20-day moving average. Right now, SGX Nifty is trading below the mark of 11,900. Good morning, Neeraj. Well, a lot of cues coming in. You've got the Hexaware news coming out right now and some brokerage notes. Interestingly, from UBS yesterday, it was Yes Bank and IndusInd Bank today. It's the small finance bank actually where they're positive on.
Yeah, well, now people will start giving credence to a lot of these brokerage notes that have come in. Morgan Stanley's, by the way, come out with a note on ICICI Bank giving a big uptick. And I think in the conversation yesterday with Shefali, Anil Agarwal did mention that he sees 30% upsides for some of those large corporate-facing banks as well. So interesting. Financials are the thick of the things, right? Yes Bank and IndusInd Bank at the lowest point of the day, and Indiabulls reversing course to end at the highest point of the day. It's all about financials, really. Let's see how these stocks react in today's trading session. But let's also bring in Agam Vakil to tell us how the derivatives cues are shaping up for this morning. Hi, Agam. Good morning.
Good morning, Navneet. What we're seeing is, as far as the benchmarks are concerned, at least as far as the Nifty goes, there was very little change in open interest yesterday. However, the Nifty Bank did see substantial unwinding in trade, considering a 10% drop in open interest. The WIX, however, continue to come off, and it is now below the mark of 13.7 to be precise. And the put call ratio, again, largely range bound at the mark of around 1.46. So again, not too much to speak for there as well. But as far as your open interest is concerned, we're looking at a 500 odd point range for now in the near term, considering open interest accumulation, the 11,500 put and the 12,000 call. Coming down to your change in open interest, we did see a little more writing yesterday around the 11,900 and the 12,000 calls. But coming down to stocks, a bunch of them which are in the F&O band, IDBI Bank, Reliance Capital and Reliance Infra. And besides that, we're watching out for PC Jeweler, which has moved out of the F&O band. Besides these stocks, also keeping an eye on ICICI Prudential, CET and RBL Bank, along with Diwan Housing Finance. All of them are seeing a surge in open interest towards shorts, that too. And BEML, Yes Bank and BPCL, of course, among others, which are seeing unwinding. We'll be watching out for Yes Bank because that was, of course, the biggest loser yesterday. And we're likely to see perhaps a little more weakness, not just in Yes Bank, but some other private sector banks as well.
Thanks for that, Agam. Just one quick perspective. Hexaware, I don't know if you got a chance to see the news or no. Big, small, medium?
No, it's certainly, for Hexaware's point of view, it's certainly a very big acquisition. They're buying Mobiquity, which is a digital consultancy firm, and it's for about $182 million, and the company has, revenues of around $70 million. So it'll certainly be an addition, a positive for Hexaware.
Okay, and I'm sure you'll be talking to the management soon, so
yes,
we'll have that conversation with the Hexaware management up as well a bit later on in the day when Agam will talk to R. Sri Krishna of Hexaware, so do watch out for that. But on that note, let's get in. Amit Jeswani of Stallion Asset Management, he joins us right now on the show to talk about his thoughts on what's happening in the markets currently. Amit, good having you as always. Thanks much for joining in. You know, there's a picture, Amit, that came in this morning on the WhatsApp Wonder Box, which spoke about how, on hindsight, if you had bet on X side of financials versus Y, you would have been laughing your way to the bank as opposed to crying if you were holding a Yes Bank, an IndusInd or some of the others. Difficult to make those calls when the moves happen. The question is, if you are starting to choose financials right now, where would you be placing your money?
So you see a large smile on my face. Probably I might be holding some of those stocks. See, in financials, it's a leveraged bet. And when you're leveraged 8, 9x, you have to bet on the promoter all the time. Like 80% of your bet, no one knows what's there inside the books. So you need to bet on promoters. I'll just give you like what are the kind of things that we are seeing. Our total credit market, Neeraj, is about 100 lakh crores. In the next 5 years, this credit market will broadly double to 200 lakh crores. Today, your private banks, let's say HDFC is to 8 lakh crores, IndusInd is 2 lakh crores, Kotak is 2.5 lakh crores, ICICI is 6 lakh crores, and Axis is about 5 lakh crores. Broadly, the whole basket today is about 21 lakh crores out of the 100 lakh crores today. In the next 5 years, this 100 lakh crores will become 200 lakh crores. Which are the guys who can actually get that market share? So the opportunity in Indian credit is huge. And the most easy way to play financials or consumer is to buy the stocks which are hitting new highs, because the markets are a lot smarter than what people think. So like follow price action in financials, you'll be better off. Like Yes Bank, and it's been a very tough ride, but I see everyone buying these shares and I'm more and more surprised. Like if you were buying them when they were making new highs, it was a different thing. But buying them because they have fallen. See, when a stock falls, let's say a Maruti has fallen because there is an economic slowdown and it's not a company, it's not an ethical problem. That is good value investing. That means you're buying a good company in bad times. But when there are corporate governance problems and you're buying a dip, that is not value investing. Warren Buffett today doesn't buy. Warren Buffett's portfolio, so because everyone quotes so much of Warren Buffett has 25% of his entire portfolio in Apple today and 22% in consumer stocks like Gillette, Coca-Cola, and financials. He has the best quality financials like Wells Fargo and all those kind of companies. So you have to buy quality when they come down, not companies with wrong corporate governance.
Okay, no, that's a fair point, and that's a very nice distinction too, Amit. I'll want to follow up on a set of stocks that are somewhere wedged in between there. There is an IndusInd Bank which is starting to come under a bit of question in terms of lack of complete clarity. That's what a couple of brokerages said. Edelweiss, IIFL, two names which were doing very well. A lot of people liked it. You liked Edelweiss too. They too have come off. What do you do with these names? I'm not even going down to Yes, which has got idiosyncratic issues, or ADAG or some of the others. What about the names that I mentioned? So IndusInd Bank, it was the only bank which didn't write off ILFS exposure at one shot, okay? Because they were trying to do some kind of evergreening kind of things that the markets didn't like it. So IndusInd, what happened is, I'll tell you, Neeraj. IndusInd has exposure to ADAG. IndusInd has exposure to ILFS. IndusInd has exposure to the DHFL, the IndusInd. So basically, all four IndusInd has exposure to SL Group as well. So people were taking, because IndusInd used to trade at 5 times book. So people were putting IndusInd in the same category as Kotak and HDFC Bank. After this crisis, what has happened? That category has changed for IndusInd, that you're good, but you're not as good as HDFC or a Kotak in lending. So that is why you see the valuation derating. Sopti will change next year, so that's going to be an important change. We need to see who's the new CEO, because in banking you bet on the promoters, on the management. The second question, so IndusInd, we need to see how they can get out of this, but they have the best ROEs. HDFC will do an ROE of 16 to 18%. IndusInd's ROE will be somewhere around 22, 23%. So if they can sort this out, it will probably be the fastest growing, like the fastest ROE, highest ROE bank. The second question is about Edelweiss. This is someplace we have positions. Neeraj, here too my bet is on the management. Okay, see, normally stocks remain expensive till the time you don't see a major bad news. Edelweiss was not cheap. We got in like 2 years back, but we're still very bullish on Edelweiss. Edelweiss, I think they have done very smart things of selling stake to your Canada pension fund. I think that's a very smart investment. See, they don't have a big daddy behind. Piramal has a big daddy behind. Your L&T has big daddy behind. For your Bajaj has a big daddy behind. For an NBFC, you need others to trust you. And with Canada in the game,
I believe they will trust. But see, even in the worst quarter, last quarter was supposed to be the worst quarter. If you see, Edelweiss earnings were 240 crores. So if you like, even the worst quarter with all negative news, all negative spreads, it gives me comfort that going forward, things will look okay. But the next leap of growth for Edelweiss will come from the AIF side. It will not come from the NBFC side. If you see, they have come out with a 2022 guidance, and that implies a very high earnings growth. I don't think like we should not rely on that part. But broadly, Edelweiss will do well over long term. But short term, it will not. It will continue to struggle with other NBFCs. It trades at 2 times price to book. The 4 times price to book is history for NBFCs. That will not gonna come back. Now the new range I think is around 2 times book. And then let's see what ROEs Edelweiss can do. The valuation depends on ROE and growth. Let's see what happens. But we're bullish. We're bullish on the bet is on the management here, and we're absolutely confident on Rashesh Shah. Ability to scale the way he scales, we're very confident.
Okay. Amit, stay on. Lots more to talk about. Keep in mind, when we talk about the price to book multiples for a lot of companies, you ignore what happens to a, you've always ignored what happened to a price to book of a Growth Finance. Therefore, you will ignore what price to book does Bajaj Finance or HDFC Bank, etc. trade at a different kettle of fish altogether. But let's go across to Darshan to talk about the key stocks which would be in focus today. NBFCs is one lot, Yes Bank, Indiabulls, IndusInd are one lot. There's a lot of other stocks which are in focus today as well. Darshan, what would you watch out for?
Yeah, so Growth Finance is something that I'll watch out for. The mandate copy that came out indicated that there will be a OFS that is there. So HDFC will sell 1.3 crore shares, 3.1 crore shares. At a floor price of 290 per share, and the deal is done to reduce stake in Growth Finance post the Bandhan Bank deal. Wockhardt also some bit of positive news that came out. First of all, they've received the Form 483 observations as far as their biosimilar facility is concerned. The Waluj and Chikalthana and Ankleshwar plants continue to be under the import alert currently. Indiabulls Housing Finance, positive news. The company says it has made any timely payment for the interest of NCDs which are due on 14 July. Some bit of negative news coming in from Hdfc Amc. The auditors have made the earlier show cause notices have been made. There have been additions that have been made to the earlier show cause notices in relation to the SL Group investment. The company is working with legal advisors, are in the process of responding to the said show cause notices. And finally, Thyrocare Technologies, some bit of positive news. The board will decide on separating the arm nuclear healthcare after the valuation report that was obtained from the merchant banker. On 18th May, the auditors had pointed out impairment of the arm, and the CMD had offered to buy out this company to avoid any losses to the shareholders. So watch out for all these companies.
Wow, so just wondering, why is it important for Thyrocare, Darshan?
Yeah, because the auditors have said that this company will be totally impaired, and instead of letting it go, the CMD said that I will buy out the company for 195 crores. That will ensure that losses don't happen to the shareholders. So that a little bit of positive. But the decision from another auditor is awaited. So when it was totally being written off, at least there's some hope for some of the minority shareholders.
Okay, watch out. And just one final follow-up. Wockhardt, really big news? Or?
No, so basically I think people should not get confused. The 3 plants which are under import alert will continue to remain under import alert. The 2 products that got approval, it seems like it was a product-specific inspection, and that also at the bioequivalence facility. So this is not part of the 3 facilities which are under import alert. So which is a minor positive for Wockhardt, but not something that you can say that the 3 plants, one of the plants has been cleared. So this plant is definitely not the one under the import alert.
Okay, thanks a lot for that, Darshan. So those are some important stocks to monitor in the session. A couple of pockets out here. You could talk about the diagnostic space or maybe even the AMC space. Now, Amit, there has been some dent of investor confidence when it comes to mutual funds because of the as a space, because of what's happening in the debt space. Do you think this disrupts the long-term trajectory of an HDFC AMC? They also have individual issues for which there are some offenses being taken against the company and the MD. And part 2 of my question would be, would Reliance Nippon Asset Management, which will no longer remain an ADAG group company, catch up on valuations, and therefore is that a better purchase opportunity?
So, Neeraj, 2 points. First of all, there's an arbitrage in Reliance Nippon. It's a nice arbitrage of 7-8% in the next. That is basically buying it at the market at 215, selling it at the buyback at 230 in the next 2-3 months to Nippon. It's 100%, like all your shares will get tendered. So that's an arbitrage. If you're using liquid funds for short term, this is like a better mechanism than liquid funds. Of course, there's some risk. The second question is about HDFC AMC. Our long-term thesis remains unchanged here. So like debt was not the reason why we bought. Basically, we were basically buying HDFC AMC for equity rise, but debt, I believe, will move towards AIFs. That's the better mechanism for debt. The short-term problems are there, but I don't see this will have a very long-term impact. Like this is not like we've not. Basically had a very strong, we've not relooked HDFC AMC because of the ongoing crisis. Again, a small portion of their revenue comes, about 30% of their revenue is not small, but 30% of their revenue comes from debt. I don't think it will grow very fast, but it will remain where it is. The main part, the pie, will come from the equity portion. So that's a very small market. If you see, they have passed on everything to the distributors. Their profit was broadly 34-35 bips on the AUM. It will remain at 34-35 bips on the AUM. So the TER cut, which was the more important issue, has had absolutely no impact on AMC companies like HDFC. Now, between a Reliance and a HDFC AMC, see, HDFC trades at 40p. The only difference is valuation arbitrage. So Nippon is broadly at 28-29p, and HDFC AMC is at 40p. The ROIC, the new invested capital, is extremely high for HDFC AMC. It's about 600%, whereas for Reliance Nippon is 100%. So both will do fantastic, but I will stick, like we will stick our money to HDFC only. You need a banking network, and Reliance is a little push product, but if you speak to any distributor, he'll tell you that HDFC just sells, and if the clients love it, we like it. And in this crisis, I would say the least affected mutual fund has probably been an ICICI and an HDFC AMC. These are two who've basically managed the crisis extremely well, and we saw in October quarter as well. If you see, when peak NBFC crisis happened, the liquid funds of HDFC raised 35,000 crores in that quarter. So people move towards safety as soon as they see that this is a problem. So HDFC will be a beneficiary and not a problem for if other the debt crisis will actually help branded players a lot more, like HDFC, who've had lesser exposure to the problem areas.
Okay, hi Amit, good morning to you. Let's shift focus towards the more riskier and the high beta space, and a space where you've been bullish in the past, and I'm talking about the real estate pack. And now the entire focus is there after the BJP's come back into the power, because there's so much of thrust on infrastructure. You believed in the past that there could be some multi-baggers from this space, and there could be some players who could even disrupt going ahead. We've seen some good returns also coming in the past from players like Oberoi Realty. Godrej has done pretty well. So going ahead at current levels, are there any stocks in this pack where you feel they can emerge as multi-baggers in the next 2 to 3 years?
Hi. So if you see, there are 4 sectors where no one makes money. One is jewelry, because there are too many corporate governance problems. One is, so we were just noting this down: jewelry, real estate, textile manufacturing, and Bollywood and education. These are 4-5 sectors where companies go bankrupt. New companies come and new companies go bankrupt. But if you see in jewelry also, you have a titan who does 1600 crores of profit and has a 1 lakh crore plus market cap now. You need to select quality in real estate. According to me, the quality players are Godrej, who can easily scale. Godrej, where the entire market is unorganized, so we might have vested interest. So this is not a recommendation, but Godrej Properties, Oberoi, these are companies that we might have in our various products. So we remain very bullish. See, there is no competition for these guys. You look at how these guys are scaling up. I'm very confident that they will do what Titan did in the jewelry space. See, most categories the market leader has 50% market share, 60% market share. Like a VIP already has 50% market share in bags. So if the industry grows at 13-14%, they will grow at 16-17%. But real estate, the market leader, if you see Godrej's con call, the market leader itself has 2.5% market share, and they have said that in the next 4 years we will double the market share to somewhere around 5-6%. So real estate is one space where I don't like as a whole, but I like the 2-3 builders which are there. They will keep gaining market share, they will keep growing fast. So those are the kind of companies we like. But we don't like the real estate space, we just like 1-2 players.
Okay. Stay on with us, Amit, while we also bring in our independent market expert to get some technical views going on the markets. Rahul Randeria is right here with us in the studios. Hi, Rahul. Good afternoon. There was a sharp recovery from the 20-day moving average in Nifty, and let's not forget it was also a day for the weekly options expiry. Some bit of volatility definitely seen. How would you approach the markets today? In SGX Nifty suggesting a downtick of about 30 to 35 points. Will you buy on any dips?
Good morning, Navneet. First of all, I would like to just share my view on the global markets. Last couple of days, I mean to say 10 to 15 days, we have seen a significant rally in the US markets. Dow Jones, Nasdaq and S&P rallied a sharp vertical rally in a very short span of time. Now if we come to the Europe, CAC, FTSE, then Switzerland, Madrid, those European markets have also rallied in a very sharp manner. Again, if we come to Europe, Asia, Nikkei, Hang Seng, Moscow has also rallied in a same tandem of the global markets. Only the Shanghai has not performed because of the trade war. Now looking at the last couple of days on the global indices, the charts are showing that some sort of exhaustion, tiredness at the higher level. So I feel that we could see some sort of pressure in the global markets in the coming days or weeks to so. Definitely in the India markets also, on the daily charts, if we look at the Nifty, it is forming a head and shoulder pattern, which is a bearish pattern and which has a significant when it makes at the top. And last couple of days we have seen selling pressure, tremendous selling pressure coming at the higher levels on any pullbacks. So at current levels for intraday, I would feel that looking at the global setup and Indian markets, I feel that we could see selling pressure coming at the higher levels. So one should trade Nifty on the short side. The range would be, shorting range would be 11,914 and on rallies to 11,945. Downside short-term positional target would be 11,800 and one should place a stop loss above 11,987. Same thing in Bank Nifty, one can sell at current levels and on rallies to 31,225. Downside positional target would be 30,500 and one should place a strict stop loss above 31,333. And one more important thing what we have seen that last couple of days India VIX has also seen under pressure, and at current levels we could see some sort of pullback, and if we see a pullback in the VIX, we could see selling pressure coming in on the indices, and whereas we have seen the call writing at the higher levels also. So upside is capped, and I feel some sort of profit booking could be seen on the indices. So one should be cautious while going long.
Okay, Shubham Agarwal of Consap with us as well. Shubham, good having you. Your thoughts on how you would approach trade today?
Good morning. If you look at the broader indices, then the broader indices is very clearly in a consolidation, and I think that the consolidation might continue for some time, and in fact that is quite healthy for the indices if it consolidates around the all-time high and then again gives a breakout upward. So I think any pullback on the Nifty will be an opportunity to buy, but the right level to enter will be, if at all we get an opportunity to enter around the level of 11,800 on the Nifty. So overall, another 3-4 days of consolidation is what we are expecting, but any pullback on the index would be used as a buying opportunity.
Okay, it's 8:50, that time of the show when we go across to Yash Upadhyay. It's time for a special segment, and that's called Bloomberg Edge, where Yash Upadhyay tells us about a stock where Bloomberg Terminal has thrown up an interesting pattern. Hi Yash, what's on your radar today?
Morning, Navneet. So we're looking at Sbi Life Insurance on the charts and a sell signal coming in on the back of the stochastics indicator. But like we always do, let's first try and understand what the stochastics indicator is and how do you interpret it. The stochastics is basically a trend following momentum oscillator, and it helps you identify when a price move is overextended it measures the current price relative to its highest highs and lowest lows. Now, how do you interpret it? You go short. The overbought mark is above the mark of 80 and oversold is below 30. Any crossover, that indicates a buy or a sell signal. Now, in the case of SBI Life Insurance, what we've seen recently is that over the last 1 month period, particularly, the stock has went from the levels of about 600 to as high as 700, which is almost a 16% move on the upside. But over the last few trading sessions, it has been consolidating around the 700 mark. There has been a bit of an indecisiveness over here. As you could see on the price chart, the stock has not moved at all over the last 4 to 5 trading sessions, making highs as well as lows. But the stock price on a closing basis has more or less remained close to the 700 mark. The stochastics in the lower panel over here, that too has given a negative crossover. So as you can see, the blue line that has crossed below the white line, giving the negative crossover. Now, mind you, it gave a negative crossover just the end of the month of May, and again it gave a small bit of a correction, but the price didn't go any lower any further. It went from about 700 to a little about 650, but again went up to 700, and for the last 5 trading sessions it has been stuck around that mark. And now again the negative crossover, this is the fall that I was referring to. 700 to about 675 is where it went to, and then again back to 700, and has been consolidating in that range. This indicates that there could be some amount of weakness coming in for SBI Life.
Yash, what's the efficacy of this in the past?
So now, 2 out of the last 4 times that the stochastics indicator has given a negative crossover, the stock on an average over the last 1 month period has fallen more than 7%.
Okay, Yash, thanks a lot for bringing in that interesting stock, and let's see how that one reacts today. But in terms of stocks, let's also check with our technical experts. What are they betting on for this Friday morning? Rahul, let me come to you. In terms of individual stock ideas for the day, what are you recommending?
Yeah, I have a sell call in CEAT. The stock has broken down the consolidation range, and yesterday we have seen it has closed below that particular level. So the momentum has broken down, and I feel that further follow-up selling could be seen from the current levels. Traders can sell on rallies at 944. Short-term positional target would be 900, and one should place a stop loss above 967. A second sell call is in Exide Industry. Again, the stock has given a breakout on the downside after a rounding top kind of consolidation formation. So selling pressure could be seen in the stock from the current levels. So one can sell Exide Industry at current levels and on rallies to 209. Downside positional target 195 with a stop loss of 215.
Okay, and Shubham, your stock recommendations?
So 3 recommendations. The first one is a buy on Federal Bank, and if you look at the momentum there, it has been consolidating for quite some time, where many of the other banks were actually in a corrective mode, and now yesterday we can see that some more build-ups has happened on the long side. So Federal Bank is a buy for a target of 114, and a stop loss can be placed at 103. The second buy recommendation is on L&T, and if you look at this overall sector, the sector has started doing quite well, and some of the peer companies have also started witnessing long build-ups. So L&T has been able to cross to a new all-time high, and after that we have seen a pullback in the stock, and this is a fairly good opportunity to use that pullback as a buying opportunity. So L&T is also a buy for a target of 1585, and a stop loss can be maintained at 1480. And lastly, one sell call on Ashok Leyland. So if you look at the momentum there, it has clearly been an underperformer for quite some time. And recently we have seen that the supports have got breached, and there is a downward breakdown that we have witnessed on the chart. And for the last couple of days, there have been short built up that is indicating that we might see further correction on Ashok Leyland. So Ashok Leyland is a sell for a target of 84, and a stop loss can be kept at 91.
Shubham, how much lower do you reckon Yes Bank can go to?
2-digit has been, a fair expectation for quite some time, and now we are getting very, very close to it. So I think 2-digit is what we should expect, because 130 was a very important support, and that has now got breached with a gap down opening. So I don't think anyone would want to go and risk their capital at this point of time. So it's clearly an avoid, and 2-digit is what I'm expecting, if not much within the time frame of 1 to 1.5 weeks.
Okay, interesting. Navneet was talking about real estate stocks with, just a while back, and how some of those could do, and Amit's view on those. Yesterday they had a fairly good day. Indiabulls real estate up 5%, Godrej Properties 3.5%. So good going out there. Rahul Randeria, quick thoughts. One top idea from real estate, if you will, or a view on maybe Godrej Properties?
Yeah, definitely. We have been bullish in the Godrej properties since last 1.5 months. Definitely the setup and the primary trend is positive. And again, yesterday, as you said, that the stock was trading strong in a highly volatile market. So definitely I would be betting on Godrej properties. One can buy at current levels, which is 921, and maybe on corrections to 910. Upside positional target would be 955, and one should place a stop loss below 890.
It'll be interesting, no need to see what Indiabulls does in the session to the whole group, right? Yesterday, reprieve of sorts, and we were talking on countdown to so many people yesterday as well. But a bounce back for all the group names.
Sure. In fact, there's more positive news coming in. Indiabulls Housing has paid interest on the NCDs where it was due today, and they've already paid that. So I think that overhang is also gone after what happened to Dewan Housing. People would have expected that, to percolate to other players as well, but that's not happened.
Yeah, and to be fair to them, they have constantly released on the exchanges the liquidity positions that they have. So maybe they've done all the right things, but interesting movers for sure yesterday, and should be in focus today as well.
Yeah, they're doing everything possible to get that banking license in the indirect way. Let's see if that happens or not. But that stock will definitely be in focus, and we're just seconds away from the pre-opening rate. Very quickly, Amit, if I could come to you and take your view on Z, which has been in focus in the recent past. Fundamentally, everything seems to be sound, but there is that overhang of the stake sale.
See, here it's going to trade according to information. So I have no information what's going to happen. Like, if you see an average of analysts, they've all believed that the fair value is somewhere around $500. But I have no views here. So we don't have no positions here. This will trade according to news. The day, 2 days before news comes out, I can with a lot of conviction tell you the stock will go up. So, yeah.
Okay.
No trade there.
Okay, the movement on that will definitely depend on how and at what price actually the stake sale happens. And we're getting the pre-opening rates on your screen. These are the initial rates. Remember, they'll be all over the place. The rates will settle down by 908. Nifty is right now indicating an uptick of about 10 to 11 points. Sensex an uptick of about 177 points. Quickly, let's pull up the stocks which will be in focus. Pull up Hdfc because of the stake sale that they'll do today for Grow Finance, and also HSBC Upgrade, which has come in giving it a target price of 2,500. So not doing much in the pre-opening session. But in terms of Nifty movers, pull up UPL. I think that's showing a down tick off in the pre-opening rate of about 2%. Hindalco, Ultratech Cement, JSW Steel are a couple of other counters. But GAIL is the one which is showing an uptick of about 4 to 5%, at least in the opening rates. Indiabulls Housing is trading in the positive. IndusInd Bank is the other one which is showing a positive tick. And besides that, your IT counters could be in focus alongside Hexaware, which has announced acquisition worth $182 million today. So Infi positive, Hexaware showing just about a meager uptick right now, and also TCS indicating a positive tick in the pre-opening session, Neeraj.
Well, the rupee at 69.5, so some bit of weakening for the currency compared to yesterday's session. It opened at 16.33 in trade yesterday, if I'm not wrong. So weakened yesterday, in today's session too, marginally off. What about the bond yields? If we have those rates, okay, they'll come in a bit, but watch out for the yields as well. They've hardened a bit compared to what happened immediately post-policy. Let's wait and watch what happens there. 2 or 3 names, Grow Finance, Indiabulls Housing Finance. Both of them should come up on your screen. Grow could well have a start which is around these levels. Let's wait and watch. 290 is the floor price, remember. Indiabulls after that 10% uptick, likely to start off higher today as well. And Jet Airways, will it succumb to further selling pressure after the big cash yesterday? Could well do that. We'll give these rates a chance to settle down. The yields are up as well. Just quickly pull them up and just show you what's happening to the bond yields as well. 6.98, so sub 7 for the yields currently. Okay, before we move back to our experts, let's get in Somit Sarkar, who joins with the top brokerage calls of the day. Somit, good morning.
Good morning, Neeraj. And the big brokerage calls for the day first we have is on UBS on small finance banks. Now, according to the brokerage, the small finance banks offer robust growth at reasonable valuation. Now, the brokerage is expecting the 3 small finance bank, that is AU Small Finance, Equitas and Ujjivan's loan book to grow at a compounded annual growth rate of 33% over FY19 to FY22. Now, this coupled with recent decline in wholesale rates is also positive for the margins of these 3 small finance banks. So, for AU Small Finance, they have maintained their neutral rating but have hiked the target price to 760 660 from 700. For Equitas, they have maintained their buy rating and have hiked the target price to 190. And for Ujjivan, they have maintained their buy rating and hiked the target price to 450 from 340. Second we have is on HDFC, where HSBC has maintained its buy rating on the stock and has hiked the target price to 2,500 rupees from 2,195. And according to the brokerage, default by a large mortgage player is expected to result into easier liquidity for the better managed player like HDFC. Now, because of this asset and growth issues of other players, the brokerage also believes that HDFC is well positioned for potential market share gains in the current environment. Now, though HDFC is the largest player in the wholesale segment, it has been slowing its growth for this segment, and this will help the NBFC mitigate asset quality risk over the long term, says the brokerage. Lastly, because of these factors, it says that HDFC is the best positioned housing finance company and continues to remain its preferred pick in this sector.
Okay, so Amit, thanks a lot for bringing all those important brokerage notes to keep an eye on for this morning. Amit, small finance banks, would you bet on that vis-a-vis what's happening to the other banking stocks in the PSU space and also for a couple of NBFCs?
Yes, they look good. They look good to me. Like all three of them, to be honest, they're doing well. But see, they're in a very initial stages, all three of them. Large wealth will be created here is what it's like betting on a startup. So these price to book at such initial levels don't matter a lot. Price to book matters a lot. All those valuation factors come a lot. They are cheap in price to book levels, but all those valuation factors come up in a very large way when the banks are larger. The opportunity for these guys is large. Ujjivan is 10,000 crores, Equitas small, AU is also 25,000 crores. So the entire pack loan book is about 40,000 crores. I expect this loan book to grow 35, and NBFCs have left their space, so they will do well. They will do well. We own one of them, a small position. If things get better, you need to increase your position. So that is very important when in these kind of places where you start with a small bet and buy more when things get better. One thing is there in microfinance. I've been investing for a lot even before they got listed here. There will be unknown risks which come in the between. So you need to be careful to take some money out of the table when things get too good as well. So it's a good investment. I would say all three would do super well in the next 3, 4, 5 years.
Well, let's wait and watch. The brokerage note seems to be interesting. Remember that, and the question mark remains that if indeed their cost factors come off materially, that's what everybody's been betting on, that if indeed the cost for an Equitas and Ujjivan, etc. Comes off, then that's the time when cost to income ratio, if that improves, that's when really the big gains start for these names. So let's wait and watch. Ujjivan, after having a fairly good run, having a new CEO, having I think Sachin Bansal on the board as well, is an interesting one to monitor. Equitas on a relative basis, I think trades cheaper compared to Ujjivan. So interesting to see what happens to this stock too going ahead over the next few quarters. I would add a 33% CAGR is what UBS believes they could do. By the way, for all the brickbats that the UBS guy received when he came out with the sell note on Yes Bank a few years ago, for now he's getting proven to be right. Let's wait and watch what happens there. The other interesting one in the session today is Hdfc Amc, and the reason I bring it up, we spoke about it fundamentally, but Shubham, I want to talk about it on the charts or the derivative positions, on the charts essentially. We don't have too much of a history to maybe back this call up, but after hitting those lows somewhere earlier in the year, it's bounced back very nicely from those 1300, 1350, 1400 levels, currently just about 30-40 points away from its all-time highs. How does it look on the charts?
Neeraj, if you look at a chart pattern where normally a listing happens and then we do see the stock going down and then a complete rebound happens. So normally this is a kind of a rounding bottom, even though the data is not too much, but still whatever data we have that is indicating that it is a kind of a rounding bottom that is getting formed. And generally whenever this kind of a formation happens, we do see a big movement coming in. So my overall expectation would be that, you know, we might see the stock moving towards the 2000 to 2050 levels, and that should at least be the first target from here. So the recommendation would be that one can look to go long, keep a strict stop loss at around 1840, and 2000 to 2050 will be the expectation on the upside.
Adani Gas is the other one that is in focus. Times of India report suggests that the French company Total could be close to buying a 30% stake in Adani Gas. I think the valuation for the 30% stake that the TR report says is somewhere around $1 billion or thereabouts. So that leaves some upsides maybe, and which is why Adani Gas is in focus, up about 4% in trade. Let's wait and watch what happens there. Amit, do you have any thoughts on some of these companies, Adani Gas in particular?
I don't track utilities, government-facing sectors at all.
Okay, what about, do you track the gas distribution companies, IGL, maybe MGL, no, but IGL and some of the others?
I'm so sorry, Neeraj.
No,
my team
fine.
does, but I don't personally track them I only stick to consumer and financials.
Okay, so never mind, Amit. So we'll talk about some of those in a bit as well. Let the market go on. But we are about 7 minutes left for the markets to kickstart trade. As the pre-open rates have settled down, we are likely to start flattish in trade. 8 minutes settled down, 11,910 is what the Nifty seems to suggest. The start would be flattish. The banks too don't suggest too much of a movement. So you'll have a start which is okay. The question is what happens to some individual names. Jet Airways certainly looks like starting off even lower. Another 9% gone now. 83 is where this is trading, and it doesn't look like there are happy times ahead, especially after the measures that the government has taken. Remember, Sajid was here and talking about how after a few other measures, which if Yes Bank, if Jet Airways doesn't quite live up to, then, and once it comes into trade to trade, eventually it could well go down the suspension route as well. Too stark to call right now, but do watch out for Jet Airways. The last 2 days have been particularly brutal for the stock. What's doing well? Just before we tell you all that you need to know, let's also talk about what's doing well. There is Equitas, which is amongst the top gainers. Indiabulls Housing, about a couple of percentage points. And Whirlpool has had some gains today, about 1%, So do watch out for that as well. But minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, some positive news flow for Wokhard. The company's received 0 observations in the Form 483 from the US FDA. The regulator had inspected the Aurangabad facility for the drug maker.
In order to comply with regulatory norms on promoter holdings, HDFC will sell little over 4% stake in Group Finance post its merger with Bandhan Bank.
Hexaware Technologies will buy 100% stake in digital consultancy firm Mobiquity for $182 million. This, according to them, will help them gain traction in the banking and pharma verticals.
Thyrocare Technologies will decide on separating on nuclear healthcare business after getting a valuation report obtained from a merchant banker. Earlier, the CMD had offered to buy out the company to ensure no loss to its shareholders.
Hdfc Amc said that it has received additional show cause notices in relation to investments of HDFC Mutual Fund in debt instruments of SL Group companies. The company has said that it is working with legal advisors and will respond soon.
And lastly, UBS has is bullish on small finance banks, raising price targets for AU Small Finance Bank, Equitas, as well as Ujjivan. Well, all the three stocks are seeing some bit of positive take, at least in the pre-opening session. Amit, if I could come back to you, you were saying you track consumer pretty closely. What's the takeaway with regard to what's happening with the auto pack right now? The slowdown is pretty much evident. Do you see any sort of turnaround coming up for these auto companies, at least in the second half? That's what we've been hearing from the interactions we've had with a couple of managements, in light of there could be festival buying or also pre-buying would relate before BS6 kicks in next year.
It's a possibility. See, we were the first ones to tell you that, like in December, we said there'll be Maruti sales will fall 20% on your show. We got bearish on auto in October, but now I'm telling you, there are still, if you speak to their like whatever the management might say. Yesterday, Rajiv Bajaj said in one of his interviews that June has been a weak month, and the slowdown will stay for some time. But it doesn't matter what they say, it matters what they order. So when we speak to the auto ancillary guys, they are yet to start ordering in a large way. So we're going to check again. Probably next time I can tell you if they've started ordering again. But last we checked, there are no large orders coming in. Like the growth in orders is not there among the auto ancillary guys till now. So we look at data. So data doesn't tell us that growth is coming back. The second market expects growth to come back, you'll see these stocks going up 10-20%. But yes, they're good, great. So Amit, these are good companies Amit, in a bad time. You should buy that.
Yeah, that's what the point, Amit. So would you accumulate some of these companies, and if so, which ones?
Yeah. Neeraj, actually, CM has said that the auto will grow at 4% this year. Even if Maruti does well, they grow at 6-7%. But our investing style is little more on the growth side. So we want to buy in companies which grow at 20, 15, 18% plus. That's not going to happen in your auto companies, but that doesn't mean you cannot buy. There are a lot of investors who are looking for it. Doesn't fit our top 10, top 15 criteria, but Maruti is a great bet, I believe, at these levels for people who have little lesser return expectations. It can go down. See, whenever you see a quality stock, Neeraj, typically they bottom out in in 12 to 14 months. The last 2 months is the time when the largest price fall happens. And when will that 2 months come? I don't know. But if that comes, I will buy it. Right now it's a 25 PE stock. It's 5-6% volume growth, 7% volume growth. I'm not interested there. But if it becomes like a 18-19 PE stock with 5-7% volume growth, we don't do this valuation arbitrage, but I might be interested there. But last 2 months, you look at all quality stocks. Whenever they have, like when they go through bad times, you see the last 2 months, you will see the largest price correction happening there, and that's the bottom time. So if Maruti goes through that, probably we might be interested.
Okay, very quickly, let's just take top technical call from our experts before the market opens. Rahul, your top call looking at the pre-opening rate?
The sell in Infosys. Yesterday, stock has given a breakdown with a gap down opening after a nice rally. So definitely, if we could see some sort of selling pressure coming, one can sell Infosys at current levels and on pull back to 749. Downside target 715 with a stop loss of 760.
Okay, that's a sell on Infi. Shubham, your top call?
So if you look at the movement right now, I think cement has been doing quite well. So Ultratech cement can be looked at. And if we have to talk about the levels there, I think 4,500 can be taken as a stop loss. And
okay, this is how the markets are starting off today. About flattish in the session for the Nifty and the Sensex. The Nifty Bank about 21 odd points lower. So it's a very flat start for the benchmark indices. The mid caps and the small caps will come up on your screen as well. Again, well, no big gyrations, a very flat start in trade. Not that anything else was anticipated any which ways. Let's get the heat map up on the screen and show you what stocks are moving and what are not. So a lot of red, well, more red than green. Let me rephrase myself. What is moving? Yes Bank 2% up in trade. Indiabulls Housing Finance marginally higher in trade. Hdfc has gotten an upgrade and that stock is up about 0.5%. Bajaj Finance continues to rise and shine. So quality is certainly gaining in today's session too. Bajaj Finance, HDFC Bank, TCS, Maruti, all of them gaining in trade. TCS hovering around its life highs. What is not doing well? Well, precious little. Reliance Industries is the top loser, down about 0.75%. IOC about 1%. BPCL about 0.5%. ITC about 0.5%. But few and far in between. Even Stevens, a flattish start to the trading day today. Yes Bank, incidentally, is that only one which is making a serious move, which you should take notice of, up about 3% in trade. What about other specific companies which are in focus today? I reckon the Indiabulls group, certainly, after the move that it made yesterday. Let's see what the stocks are doing today. Indiabulls Housing, flattish move, about 0.5%. But Indiabulls Real Estate is down about 4%. And Indiabulls Ventures too is starting off very, very flat. So no big moves here. What about the healthcare related stocks? Thyrocare and Wockhardt, both of them were in focus. Wockhardt, 0 US FDA observations, up about 3%. And Thyrocare, the news fails to revive the stock, down about 0.5% in the session. Incidentally, Well, let's toss it to Navneet to try and figure out what is she spotting. Growth Finance should also be in focus today, Navneet.
Neeraj, Growth Finance is down 6%, but that could be on back of HDFC selling 4% stake at about 290 per share. So that's down about 6%. Jet Airways is down about another 10% in today's session. Your usual suspects, Manpasan, JP Associates, Eros are down all 4 to 5%. Cox and Kings has also seen some bit of cuts. But on the gaining side, you've got stocks like Walkhart, which has seen some bit of gains after that report came in. They did not receive any sort of observation with regard to 480 form for one of its Aurangabad unit. The small finance bank, Jeevan, Equitas, AU Small Finance. Remember, there's a brokerage note from UBS where they are bullish and they've raised the target price. The other gainers are Jindal Stainless. That's up about 2 to 2.5%. Remember, NMDC, by the way, that was in focus. Now its mines in Chhattisgarh are operational. That's the news that we got yesterday. So that's starting the day with gains of about 2%. Hexaware is the other one. Post the acquisition of Mobiquity of about $182 million. That's also starting the day with a positive tick of about 2%. Gas distribution companies, IGL is starting the day on a positive note, and Adani Transmission is also seeing some bit of gains. And talking about the Adani Group, let's just pull up Adani Gas on back of that news report where the news report suggests that French MNC Total could buy almost 30% stake. That's starting the day on a very positive note, up about 6%. So a couple of other stocks, pull up Kalpatru. There was a brokerage note from Phillip Capital. They've initiated a coverage giving it a price target of 670, 2% higher for this one as well. And the analyst meet with regard to Persistent Systems, some positive takeaways coming up from that analyst meet, and Persistent is not doing too much actually. It's just about flattish in trade as we speak, Neeraj.
REITs, I just want to mention REITs. I don't know if you probably mentioned it, but on the expectations of the bonus issue, REITs is up about 5%, still off its 52-week highs of 326, but certainly doing well in the session today is REITs. Well, opening thoughts from our experts then. Shubham, I'll come to you first. We had, because of the market open, couldn't quite take your call. I reckon you have a long call on Ultratech. Maybe you explain that, and any other stock which you see on market open.
Yes, so Ultratech, as I was discussing, it's quoting at around good support, and the cement pack has started witnessing some momentum. So I think one should look to initiate a buy there. So if looking at a positional view, 4500 should be the stop loss, and on the upside 4700 at least should be the first target, and the target can also extend to 4850. That's the positional target that I'm looking at Ultratech. And if I have to add one more stock after the market opening, I think Equitas, the way that the breakout is happening today looks very encouraging, and 5-6 days of consolidation, and today we are witnessing a breakout. And if you notice, despite the market correcting, this was one of the most stable stocks and it did not witness any kind of a correction. So I think this breakout should be trusted, and we should look to build a long position there. So a long can be built on Equitas with a stop loss at 138 and for a target of 146.
Okay, Rahul, Randeria, quick opening thoughts. What stands out? What stock stands out for you?
Yeah, again, I have a sell call in Canara Bank. It has formed a head and shoulder pattern. Yesterday we have seen a breakout on the downside. Initially we have seen a pullback in the later part, but definitely I feel that selling pressure could be seen in the stock. Traders can go short at current levels, which is 262. Positional stop loss would be 272 and downside target would be 240.
Okay, that's a sell call coming in on Canara Bank. I just want to pull up a few stocks. Pull up Cholamandalam investment. Remember, there is corporate action. The stock is split, so the stock's not doing too much, but you have seen some bit of, okay, I think we'll adjust that one for you. The other ones which have seen some bit of gain, pull out Diwan Housing. That was down 11% in yesterday's trade. Let's see what that's doing now. Down another 2% in trade. Shubham, 2% lower today, almost 10 to 11% lower in yesterday's session. If somebody's taken short positions here, what would you recommend them to do? It's Friday. Should they be booking profits or continue to hold on to shorts?
I think one should look to book profit, and the reason is that yesterday's low coincides with the previous swing low, which is roughly around the level of 77. And if at all the stock enters a pullback mode, I think we might again get an opportunity to sell around the level of 88. So it's certainly not a buy because the trend is quite weak on the medium term chart. So if anyone is holding shorts, I think one should look to book profit for now. And 86 to 88 will be the zone where if the stock pulls back, then we can again look to initiate short positions. But for now, it's one should look to book profit.
Okay, remember the oil marketing companies will be in focus. We've had the Brent crude prices rebounding from their 5-month lows after 2 oil tankers were attacked in the Gulf of Oman. But Brent crude right now is quoting around the levels of 61.6. Let's just see what the oil marketing companies are doing. HPCL, BPCL and IOC. IOC is down about 1% in trade, and the other ones will too come up on your screen. BPCL is also seeing some cuts. Rahul, technically on the charts, is there any position that you would recommend on any of these stocks? They're seeing cuts of about 1%. Respectively.
Yeah, specifically if you talk about BPCL, in the stock has been under pressure. Last 3 days we have seen some sort of exhaustion in the selling, and definitely as of now it is trading an inside dig. But it would be a conditional buy. If BPCL crosses last 3 days high, which is 391 on the spot levels, then only I would recommend a buy. And on the upside, I feel that we could see a technical pullback towards the levels of 405. One should place a strict stop loss below 383, but one should buy only above the breakout of 391.
Jet Airways is down 12% at 81 rupees, so keep that at the back of your mind. We've got an interesting query and a right one at that too. Amit Jeswani, we look at companies which are unique a lot of times, the sin companies, and throw in a casino player, Delta Corp, or maybe some of the liquor companies, no longer sin companies really, but let's classify them that way. What are your thoughts here? They form within that wider bucket of consumption. Do you like any of the names and why?
So we don't have any positions in any sin stocks, unfortunately, but we love sin companies as a theme, and we are... No, not a religious reason. Okay. It's just that we have like UBL volume growth was 3-4%, right, for the last 5-6 years. The last 1.5 years they've done well, so we missed out on that trade. United Spirit now seems to be that turnaround point is coming, that inflection point for United Spirits is coming this quarter. Probably from this quarter onwards. I'm seeing that they have done fantastic work for the last 3-4 years, United Spirit, and this will become a very, very, very large company, I believe, in the next few years. It's just that our capital just becomes a problem because we have 20-25% growing companies, and it hurts a lot to sell a 20-25% growing company and buy a 10% growing company. So that becomes a problem for us. But these are very super business models. Delta, I love the business models, but there are some things like right now the GST thing. I need to see what's happening. I've not studied. I have studied the business, but what the latest things I've not studied what's happening. We don't have cash on the portfolio, so. Delta, I'm going to have a look, but overall, sin stocks will create massive wealth for you in the long term. The market cap is very small. Like just lately, there was a Chinese company called, I am forgetting the name, but it just hit a $150 billion market cap a few weeks back, and that's been the best performing Chinese stock in the last 3, 4, 5 years. So you need to see alcohol space is a very nice space. It's just getting started, I believe. But we don't have positions yet, but we will get it when things we have extra money.
I must say, there's been this whole PE erosion that has happened for all these sin companies. So United Spirits, the growth numbers have been chalk and cheese every year, but the PE multiples for United Spirits have corrected quite significantly, and which is why the stock has been laboring at these 550 odd levels. Similarly for Delta Corp, ever since the GST news and that some other news came about, the stock has been under pressure. The only whiff of good news is that I think yesterday or day before, the Goa Chief Minister, and apparently in a newspaper report, it quoted the Goa Chief Minister as having said that casinos are important for Goa tourism, and therefore that overhang on whether the casinos will be shut down or moved out might just kind of recede from the minds of the investors. So
also let's see if we can expect any sort of clarity with regard to, there were news reports suggesting that they've evaded GST. Yeah. With regard to calculation, there's a meeting on June 20th. So I'm sure even with regard to sin stocks, ITC could be in focus because we've not seen any sort of increase coming in the last 22 months. And this is one stock investors or traders really keep an eye on. So we'll watch out for all these stocks. But in terms of markets right now, Nifty is trading below the mark of 11,900. And Adani Gas is the one on back of news reports. Remember, we just highlighted that stock for you. It's trading with gains of 4 to 4.5%. And just not about today, by the way. The stock has been an outperformer even on YTD basis, up over 70% in trade. Shubham, if I could come to you on the charts, how does this look with today's gain of 4 to 4.5%? Would you advise taking more positions here?
So Adani Gas, I think the gap up opening that is there today seems quite encouraging, but after the opening we have seen that the stock has started drifting down. So I think the right level to enter would be if we can get 174 during the day, and then one can look to maintain a stop loss at 168 for a target of 185. So it's certainly a buy. The only thing is if we get a slight pullback up to the level of 174, then I think the trade will get more lucrative.
Okay. Well, there's a query, of course, that's coming on the pharma stocks as well, and I'm not surprised because the conversations around what happens to pricing, etc., are very divergent. Brokerages have different views, companies have been saying different things, yet the prices have maybe held up but have not gained too dramatically at all. Amit, Jeswani, do you have any thoughts here? Maybe these are not the companies that are growing 20-25%. But valuations compared to 10-year or long-term averages seem compelling.
Neeraj, my portfolio is 45% financials, 25% consumer, 18% IT. So these. I am very concentrated in these stocks, and out of my financial space, except one stock, all stocks are at lifetime highs. So you need price action as well. In pharma, we have a punt in one of our non-core portfolio, and that is on the API space. We own two companies. One is Divi's, which didn't report good numbers this quarter, but broadly I like the theme that this is the first time that they are doing capex. They're doing a 2,000 crore capex after a long time, and typically they do 2x asset turnover. So in the next 3-4 years, I expect the turnover to double of Divi's Labs. The second company we own is a small, small company called Solara, but we can sell it anytime. So we got in very cheap. This is an API trade. This is again like a pollution trade, and this is not your typical US generic pharma kind of trade. Pharma we don't own. These are just our punts, which I said, the two punts that we own in our portfolio, but these are not long-term investments for me.
Okay, the two API players, Divi's and Solara. Solara is the one that got separated from Sequent and currently at 476. I think it is trading in or around new highs for itself. Amit, Jeswani, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you so much, Neeraj. Thank you so much.
Okay, last couple of thoughts from both our technical experts as well. You know, the tricky one is Indiabulls Housing Finance. That one is now down about 3%. By the way, IndusInd continues to drag lower, and today some of the banks like Kotak and ICICI too have gone off. So the bank nifty is certainly under a bit of pressure, and that's pulling down the index along with it. Shubham, first 15 minutes into trade. Rahul, Randeria, what do you do here? The financials in particular, and maybe Indiabulls Housing Finance, which is down about 3%.
If you look at Indiabulls Housing Finance, yesterday we have seen that some news came and the stock had shooted up very sharply, and today again it is giving up the yesterday's momentum. So definitely I would not trade the stock. I would wait for the price to get stable. Maybe I expect price to get stable in Indiabulls Housing Finance around 640, 635. That would be the area I would be looking out to enter in the stock. As of now, I would be avoiding the stock, but those who have bought yesterday and getting profit, one should try to book profits at the higher levels.
Okay, what about some of the other banking names? All of them are looking soft. The Nifty Bank is now down 0.5%, Rahul.
Yeah, Neeraj, as we said that we are bearish on the index as well as on the banking stock also. If you look at the Kotak Bank was many times in the recent past have been seen that failed to see the follow-up buying coming in the stock at the higher levels. So definitely some sort of profit booking could be seen in the stock. I feel that 4 to 5% correction could be coming in the Kotak Bank. So one can sell at 1486, which is current market price, and on pullbacks to 1500. Stop loss should be placed about 1525. Downside, I feel that stock can test the levels of 1400 in short to medium term.
Okay, Kotak was in fact one of the top gainers in yesterday's trade. Very quickly, technical call on Hexaware. The stock's seen some bit of positive reaction post the fundamental news which has just come in.
Yeah, even yesterday, market has been highly volatile, and again today, market under pressure and stock is going up. So definitely the momentum in the stock is positive. One can, for short to medium term, one can buy at 353. Stop loss should be placed at 346. Upside, the stock can test the levels of 336. But one should book profit at the higher levels because 366 is the major resistance area.
Up 2% for sure right now, Hexaware. And I'm just trying to look at the small cap space. And aside of Jet Airways, which is down about 12%, Indiabulls Real Estate is the other big loser, which is down about 5%. Eros and McLeod Russell continue to grind lower, so no surprises there whatsoever. On the gaining side, at the small cap end of the market, there is Syngene, which is up about 3%, Equitas up about 3%, Snowman Logistics up about 2.5%. So there are a couple of names that have done reasonably okay. I know maybe we took these calls earlier, but Rahul, my final question to you, and that is between Equitas and Ujjivan, which chart looks better?
Definitely, I will be going out for Ujjivan. In the recent past, we have seen the stock has made a sharp bottom at 180, and then it has started moving significantly, making higher tops, higher bottom in the rising channel. Currently, it is just trading above its 100-day and 200-day moving average, which both are converged. So I would take a chance to go long at current levels, but looking at the volatility of the market, I would place a strict stop loss below 307. And I feel that stock can test the levels of 370 in short to medium term. But one should follow a strict stop loss because of the volatile nature of the markets.
Okay, Rahul, you have any more questions?
No.
Okay, we'll leave it at that note. Thanks a lot for joining us today and taking us through the technical views. In fact, Neeraj, it's not a great start at all, and Rahul was speaking how VIX was falling. It's up in today's session. All the sectoral indices are also trading in red. So we've been talking about broader markets for a really long time, and market breadth in today's session continues to be weak once again.
Well, maybe not towing the global markets line at all, but take a break on that note. On a weak note for the markets. But up next, a very interesting discussion. We'll speak to Tarun Mehta, who is the co-founder and CEO of Ather Energy, and Jitendra Adhia, President Finance at Atul Auto Two-Wheelers, on their preparedness for the EV transition, as Niti Aayog has suggested that all 2- and 3-wheelers sold need to be electric from 2026.